Welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Courtney Reagan, filling in today for Bob Pisani, celebrating single stocks ETFs 1 year later. It's been 1 year now since Granite Shares launched its lineups of bull-bear ETFs for names like Tesla and Apple here in the U.S., and there's been no shortage of activity in those names, plus NVIDIA, which has ridden the wave of AI enthusiasm in recent months. But other single-stock plays haven't seen nearly as much action. Why is that? Let's ask Will Rind, he's founder and CEO of Granite Shares, and Dave Nottig, he's financial futurist at Vetify. So, Will, I'm going to start with you. I mean, your first single stocks ETFs arose in the U.S. about August of last year, including your long Tesla ETF, followed then later by that long NVIDIA ETF we mentioned. So give us an update on how they've been received by investors and why have some maybe not fared as well as other heavy-hitting tech names?
Well, a couple of thoughts, Courtney. So I think in terms of the flows more broadly, we've seen a lot of money go into fixed income ETFs, at the beginning of the year, a lot of money going into money market funds. So I think that the rally that we've seen more broadly over the last 6 months, maybe hasn't been as participated in as you might think, just looking at the actual performance numbers. Secondly, when it comes to individual single stock ETFs, the interest in those particular tickers is going to be very much correlated with the interest in the underlying stock. So there's always enthusiasm for companies like Tesla, be it on the long and the short side. NVIDIA really has, captured the AI zeitgeist, so far this year. There's a huge amount of interest in that particular name. And then other names will be very much dependent about the enthusiasm at that particular time. So whether it's China tech, with Alibaba or Babex as our leveraged single stock on the company, or crypto, there's a huge amount of interest around the approval or potential approval, of course, of a ETF linked to physical Bitcoin. So there's a lot of interest in something like Cornell, which is leveraged Coinbase. And so, again, like the underlying companies themselves, the demand for those individual leveraged single stock ETFs will be very much linked to news and enthusiasm for the company at the time.
That makes a lot of sense. So, Dave, then what's the benefit of going long or short a stock using an ETF versus, say, using a mortgage brokerage account or even just buying a put or a call option?
Yeah, I mean, really, it's just convenience, right? If you're an investor who doesn't perhaps have options approved on their account, which is the majority of people with a discount brokerage account, or if you don't have margin borrowing turned on in your account, which again is the majority of people who have access to a trading account, don't turn on that and use that margin feature. Both of those are required if you want to replicate some of these exposures on your own. I think it's worth noting that ETFs now serve all kinds of investors, from long-term buy and hold investors who trade every 30 years to day traders who trade every 30 minutes. These products obviously lean much more towards that speculative side of the balance sheet, and the trading volumes have been substantial. The assets, I think we're sitting at about 1.3 billion across all the various single stock products that are out there, which is a sizable number. Obviously, they have been successful, but I would never expect to see them pick up, say, mid-cap names. Those aren't the things people trade.
Yeah, that's a good point. Well, I understand there's a huge amount of activity on a daily basis. I mean, the NVIDIA long ETF can churn over half the assets under management in a single day. I mean, what kind of churn does that tell us? And what are we talking about? What does that really mean?
Yeah, I mean, similar to what Dave was just saying, that there's been a huge amount of interest, and because clearly these products are leveraged, they lend themselves much more to shorter term type activity or shorter term exposures. And so one way to measure interest is not just the assets under management, but the amount of volume and the value traded on exchange. And with something like NVDL, even today, as I looked before I came on, we traded over $85 million in terms of value. So that's well over, at the moment, about half the fund. And there's just, I think that goes to show there's a huge pool of investors that are really interested in these particular products and are very interested in trading them and trading them pretty consistently.
Anything, it seems, to have to do with Tesla and NVIDIA gets people's attention these days. Dave, anything to add here before we move on?
Yeah, I would just say that, these products, we should see more of them. I know that there are a bunch that have been filed. I know, Will, you probably got some in the can too. But there will be more of these products. And I think what we'll see is that a lot of them will sit around and be uninteresting and languish for a while until there's a headline. And then all of a sudden, we're going to be talking about why everybody is trading IBM dailies, right? And I think it's going to be a very different world. So I do think that these products have a place in the market. I think they do exactly what they say on the tin. And I think for people who are very active traders, they serve a real purpose.